Hi everyone, welcome to ACCA Advanced Taxation video lectures. In this lecture we are going to look at a past exam paper which is relevant to partnerships. So it will test our knowledge about partnerships and how do we calculate the profit or loss with the partnership when there are few partners. And as I said, that's because there are few partners in the partnership, so someone will be leaving the partnership, the other partner might be joining the partnership. So every individual will have their own basis period, they will have their own tax years and accounting years, so everyone will be involving in their own tax zones, right? So examiner might give you 5 or 6 partners or 3 partners in the question, but he will be asking you about a couple of partners information, right? So you will be only concerned about that. You won't be bothered about the other partners, what would be their tax consequences. You will be only bothered about the ones the examiner is emphasizing about. All right, now if you just move to a question number 8 of BPP exam kit, I'm just going to share the question with you through the screen share option. Question name is Simon. If you have any other exam kit, it was examined in June 2009, this question was, and question name is Simon. First of all, we are going to look at the requirement A1, which asks that calculate Simon's share of tax adjusted trading loss for the year ended 5th of April 2019. Right, so he's asking about the tax adjusted trading loss, which tells me that the partnership is already in the loss, right? So it says Simon's share of tax adjusted trading loss for the year ended 5th of April 2019. So question starts by saying that Simon is a partner in the firm, and you have to assume that today's date is 15th of March 2019, by the way. So Simon's a partner in the firm Ellington & Company. She's seeking advice on tax efficient use of a share of partnership's loss for the year ended 5th of April 2019. Simon intends to establish a new business and is considering to need to register for VAT. We're not concerned about that. The following information has been obtained from a meeting with Simon. As now, Simon's income is £14,000. Dividends, we're not concerned about that. And we're not concerned about her capital gain structure. Just come to Ellington & Company, please, to save ourselves some time, because we are only doing the part A1 for now. So in this one, he says that has been trading for many years. So he has been this partnership has been trading for many years. Has 2 partners, Ellington and Simon. The third partner, Bessie, retires on 28th of February 2019. Now, good news is that the year end is 5th of April 2019, right? So it is according to our tax years. We do not have to worry about that. So it is ending on year end is 5th of April 2019, but one partner is leaving on 28th of February 2019. So we will take the loss first. We'll calculate the trading loss of the partnership. Then we will apportion it to the point when the one partner was leaving. So although the total loss will be for the 12 months, but we will proportionate it to the point when the one partner was leaving, so that we can calculate his share as well and the other's share. After leaving that partner, the partnership share will be different, right? So that is the case normally. Now it says that made a loss in the year ended 5th of April 2019. After that, it says that is budgeted to make tax adjusted trading profits of no more than £25,000 per year for the next 5 years, for the next few years. Is registered for VAT purposes. We're not concerned about that. Now this is the information for our current year, Ellington & Company results for the year ended 5th of April 2019. The firm made a tax adjusted trading loss before deduction of the capital allowance of £90,000. This is the trading loss, but please remember we have to deduct the capital allowance yet. We haven't deducted the capital allowance. Now we know that when it is a profit, trading profit, we deduct capital allowance out of that, which will reduce our capital loss. When we deduct the capital allowance out of trading profit, it will reduce our trading profit. So we will pay less tax. Now, because it is a loss already, when we deduct the capital allowance out of it, it will increase our loss, right? I hope that it is so obvious. The firm purchased office equipment on 1st of December 2018 for $21,200 exclusive of VAT. Now this information is given to us for the purposes of capital allowance. We know that when office equipment has been purchased, it would normally go into the main pool, but there is annual investment allowance on that. So we will take whole amount as capital allowance because there is annual investment allowance as well, available as well. And after that, it says the balance of the capital allowance main pool on 5th of April 2018 was £700. Now it is giving me the information about the main pool. It says that £700 was the balance when we started the year. The balance of the main pool was £700. Now it is giving me a hint of the small balance exemption. If you remember, I told you that before taking any writing down allowance less than £1,000, then the whole amount will go to the capital allowance. So because the balance is £700, which is less than £1,000, this whole amount of £700 will go into the capital allowance under the small balance allowance exemption. Right, so that will be our capital allowance as well, along with 21,200. Then after that, it says the balance on the capital allowance on the main pool. No, we have already seen that anyway. So the Ellington and Company profit sharing arrangement is given to us. Beneath that, annual salaries will be 15,000, 11,500, and 13,000 pounds for all of these partners. So they will be taking salaries as well, right? Excuse me. Now after that, it says profit sharing ratios. Profit sharing ratios are 3, 2, and 2. Before, the point when there were 3 partners, and so this information is up until 28th February 2019. And after that, from 1st of March 2019, annual salaries are £14,000 for the remaining 2 partners, and the profit sharing ratio is equal as well. And the information about the Simon's new business is given after that. We are not concerned about that. Right, so we can solve this example. Sorry, not an example, it's a question. So tax adjusted trading loss, tax adjusted trading loss of which partnership? Trading loss £90,000. Right, so that is a £90,000 loss. After that, we have to deduct the capital allowance out of it yet. We haven't deducted the capital allowance, so we'll deduct the capital allowance out of it. So normally it is less, so we will write it down as less, so less capital allowance. So capital allowance. So in capital allowance, there will be annual investment allowance of 100% on 21,200. So 21,200 capital annual investment allowance, and small balance allowance as well. Small balance allowance will be available on £700, which would be 21,900 here. So if it is, minus minus plus, and that is a total loss. Right, so that would be 90,000 plus 21,900. It would be 111,900. Right, so that is our total loss for the partnership. Now, as I said to you earlier as well, because one partner is leaving the partnership, so we will have to see that when he is leaving the partnership, up to that date, what would be the profit. Now, one partner is leaving on, if you see on the question, one partner is leaving on what date? 28th of February he is leaving. So if he is leaving 28th of February 2019, we have to take profits up to that date. So it will be from 6th of April to 28th of February, which would be 11 months. So from 6th of April, so it is a loss as well. So from 2575, that is loss for the 11 months. Now out of this loss, because the partnership is already in the loss, but it doesn't mean that the business won't pay salaries to the partners. Although the partnership is already in the loss, but we have to pay the salaries yet. Now when we pay the salaries, the business is already in the loss. When we pay the salaries on top of that, of course the loss will increase, right? So we will pay the salaries now. So salaries, and we know the salaries will be for 11 months as well. Salaries for 11 months. And salaries for 11 months would be, we'll have to see how much is in the question. Salaries are 15,000, 11,500. So these are 15,000 pounds, 11,500, and what else? £13,000 times 11/12. Now it will be deducted out of the partnership because it is something we are paying out. So although the partnership was already in the loss, but it will increase the loss of the partnership. Now, although it will increase the loss of the partnership, it is a negative amount for the partnership, for the business, but it is a positive figure for the partners, because it is the money coming into the partners, right? So although this is the money coming into the partnership, but now we have to see that how much is the share of loss for each partner. So we'll have to add these two together, which will give me the eventual loss of the partnership, plus 138,834 is a 138,834 is the loss of the total loss of the partnership. Now we have to divide the share of partnership. We have to divide this into the partners. Share of partners, 39,667, 39,660. So I've already calculated the loss of the partners. So this was a total loss, which was 138,834 after paying the salaries. This is for 11 months, and I've took the share of all of these three partners. It was 3, 2, and 2. The share was so we have 59,500 for E, and then 39,667 for S, and for B is equal amount as well. So just round it down and round it up just to make this equal to the 834. So there might be minor differences because we are rounding up or down, right? So it doesn't matter. Only the method matters. If the method is fine, then that's fine. You'll earn the marks. Anyway, after that we have to do the remaining bits. Now this date, one partner was left on that date, so 1 month is still left, so we have to calculate the profit and loss and salaries for the remaining 1 month. So basically total loss was this amount, 1,111. So from 1st March to 5th April 2019, loss of partnership. So loss of partnership is 111,900 times 11/12. So times 11/12. That is sorry, not 11 over, times 1/12. We've already done the 11/12 anyway. 11900 times 1/12, 93.25. So that is loss of the partnership, 93.25. We have to pay the salaries yet. So salaries after that would be how much? How much was the salary? Salary after that was £14,000 each. So 14,000 for whole year. We have to take 1 month only. £14,000 multiplied by 1/12. So £14,000 times 1/12, that is 1166. So which are the two partners? These two, E and S. So it is 1167 and 1166 for these two partners, which are salaries, right? Now this whole figure, although it is positive amount here, but it will be negative amount in the partnerships. So plus 1167, that is how much? 2333. That is a 2333 is this figure. This is the salary paid. Now total loss after paying the salaries is 9325 plus 2333, 11,658. Now this is the loss which will be divided into these two partners, right? Because the partnership had to pay the salaries as well. So 11,658 divided by 2, this will be equally shared, 5829. This is a negative figure, 5829. This is also a negative figure. Now for partners, the share of partnership is a loss. It is a negative figure. Salaries are positive figure because they are taking the salaries. And please remember, this loss was minor, but when we have paid the salaries on top of the loss, then of course it will increase the loss, right? So that is a loss of the partnership now after paying the salaries. Now we are only concerned about Simon in this case, so just calculate the total loss of Simon. So 10,542 is a salary which was for 11 months, then there was a loss of 11 months which was 39,667. Then there was a salary for the remaining 1 month when there were only two partners, 1166, and then we'll take 1 month worth of 1 month worth of loss as well, right? So if we make this figure, and if you just sum up this figure, whatever this amount is, that is a share of Simon. Likewise for E and B as well, but we are not concerned about E and B. We are only concerned about Simon. So just calculate the total figure of Simon, please, on the calculator, right? So that is basically share of Simon excuse me, that is share of Simon for 11 for the total months, for the total period. So that's how much is a loss of Simon. Right then, in the B requirement, if you look at, just move to the B requirement where it says that just advise Simon, state the alternative strategies available to Simon in respect of a share of taxable trading loss for the year ended 5th of April 2019. Now we have already seen the trading losses, haven't we? We've already seen the trading loss, and we know that how can we adjust trading losses. We have seen in our one of the previous video lectures that the loss can be shared in our current period against trading profit, if not against general income, then against previous year's general income, then against current year's the capital gains and the previous year's capital gains as well. So you just have to communicate this in a summary, in a commentary style, that Simon has different options. She can do it against general income of the current period, then against capital gains, then the previous year's general income and the previous year's capital gains as well. And if still something is left, then we always have an option to carry forward our trading loss so that we can adjust it against the profits of the future periods. Now, when we are trading, when we are carrying forward when we are carrying the loss forward, we can only adjust it against the profit of the same trade. Now, because we know that Simon's, Ellington and companies are in the loss in this period, but it says in the question that it will be £25,000 per year profit after in few years time, right? So we know that we are hopeful that there will be profit. So we can always carry it forward so that in the future we will be able to adjust it against it. Now in the next requirement it says that explain the best possible strategy among the trading loss reliefs. So you can just say, you will have to see that how much is her the current period income, in which we have been given Simon's income of £14,000 in the tax year 17-18, which was previous tax year, then £4,800 in the current tax year 18-19, and nil in the subsequent years. So this information is given to tell us that how much she is earning now, how much she was earning before. So we'll have to see that in current year how much she is earning. Now we'll have to then see that this is the total loss of Simon. So how can she adjust this loss? She can adjust. Can she adjust in the current period against the total income? Can she adjust in the previous period? How much she was taxed? How much was the tax which she was paying in the previous period? And can she do it against the future periods? Likewise for capital gains as well. Now this third A3 part, you will be able to do it in a better way when we have covered the whole syllabus, including capital gains tax as well, because it will have a little treatment of capital gains tax, because we can always adjust our loss against not only current period's general income but also against current period's capital gains. Right, so when you are finished with the capital gains, just mark it. When we are finished with capital gains, you have to come to this part A3, and you have to do it yourself. And if you are struggling, you will have to just think about it from different angles. That this is the total loss of Simon. How can she adjust? how can she set it off? How can she best set it off? What is the best way? Of course, the best way is that where we are saving the most tax. We have seen in our previous chapter the best way is to do when we are saving tax at the highest rate, when we are wasting least amount of personal allowance and annual exemption of capital gains tax, and of course the earlier the better, right? So these are the different options. So you can do this part when we have finished with capital gains. In a couple of lectures time we would be finished with capital gains tax. Then you will come back and do this question part A3 of question 8, Simon. That's your homework. Just write it down on your notebook. You'll have to do that when we're finished with capital gains tax. I will see you in the next video, and then we will continue with our journey of advanced taxation. In the meantime, if you want to note down this question, just note down. There might be a few differences in your calculation and mine, and I might have done some mistakes as well, calculation mistakes. That's why I'll always ask you to redo these calculations, even though I'm doing it. But sometimes, because there are no students because of this medium of recorded lectures, no student is sitting in my class so that he can tell me that, oh no, you're doing it wrong, right? So if I'm in the live class, student always spot the mistake. They can spot the mistake and they can say you're doing it wrong. Then I can just rectify it straight away. Now in this recorded version, I cannot do so. So if there is a mistake, I'm sorry for that, but there will be only mathematical errors which you can always do on the calculator. All right. So that's why I always ask you, just keep your calculator in hand. Always do these calculations again and again. Not only you will be spotting my mistakes so that you can let me know, but also you will be benefiting yourself, because the more you use your own calculator with your own hands, it will save you time in your exam hall, because you will be comfortable in your calculator like you do on the laptop with typing. So you will be spending less time doing the calculation and more time thinking and planning the exam. I will see you in the next video then. Goodbye.